friends and associates. Welcome to Wealth Builders in Denver, Colorado. Scripture says in Deuteronomy 8:18, "Remember the Lord, your God, for it is He who gives you the ability to produce wealth." As men and women of God, we all want to succeed in our sphere of influence. We all want to make a difference in the kingdom of God. We all want to leave a lasting legacy for generations. Are you ready to be challenged? Do you thrive on inspiration? We all need a healthy dose of encouragement. You'll also receive expert instruction on proven and practical strategies and documented best practices. That's what Wealth Builders is all about. It's time to get off the sidelines and get in the game.
Good morning, everyone, and welcome to Navigating the New Normal. My name is Conrad, and this is my husband, Dave.
Good morning.
And we have the privilege of hosting the live stream today as Billy and Becky are taking a Saturday off, a well-deserved Saturday off.
Good.
Well, we're so glad that you joined us, and we've got a wonderful program today. We've got our special guest speaker, Bill Bronchick, today. Bill, can you say hi to everyone?
Hi, everybody.
And Bill is going to be, he's going to be teaching on something that we've had so many questions on, Dave, throughout the live stream. And he's going to talk about the Silver Linings Playbook, where the opportunities will be in real estate in the coming months. Doesn't that sound awesome?
That sounds really good.
And so we'll tell you a little bit more about Bill in a little bit. And we want to welcome Mike Davis. Welcome, Mike. And if you want to greet everyone.
Hello, everyone. It's good to be here. And I'm really excited about what Bill's going to be talking about today. So I think everybody's going to be blessed.
Awesome. And we also have Dan Dyer. Good morning, Dan.
Good morning. I'm so glad to learn about the new normal in real estate. I'm anxious to hear.
It's going to be awesome. Thank you. And so we just want to give you a few updates before we get started. And the first one is just to remind you about wealthbuilders.org. Do you know, we've been working a lot, the team, and getting the website all up to date for you with lots of new information. So to keep up to date on events and access to the blogs and much more, go to wealthbuilders.org. Also, if you subscribe today to Wealth Builders website, or if you are already subscribed, you will receive a free link to access Bill Bronchick's real estate video teaching from the Wealth Builders 2020 conference. This link will come to you in an email this week, and so watch for it. Also, the entire Wealth Builders conference is available to you in DVD, and you can purchase it at wealthbuilders.org. And I have to say, Dave, this was the best Wealth Builders conference that I have ever attended. So you want to take advantage of this. Who would have thought at that time that we would have what is happening today? We had no idea that all this pandemic was coming.
Right.
Also, if you want to watch the previous week's live stream, you can watch it at wealthbuilders.org. If you go down, there's a banner that's Navigating the New Normal, and you can click on that and you can watch all the past live streams. So you want to take advantage of that. That's really good. And last week was awesome. Billy had some great information on a variety of topics. All right, we've got some upcoming events. We've got the real estate workshop that is coming on June 12th to the 14th. It is completely sold out in person, but we've opened up a live stream, and we've got a code that you can register for this live stream and receive $100 off. So if you go to wealthbuilders.org and click on the banner and you want to get on that live stream, use the code RE100. And instead of the $399 fee, just this week, it's going to end after this week, you can attend for $299. Also coming up in August, the last weekend of August, we've got the Business Mastery Workshop. And that's one day that you teach with us. So I'm so excited for that. So if you're interested in that, we've got that link up on the website as well. And then also we've got a giveaway that we do every week. And this week we are giving away my teaching called Living Your Purpose. Do you want to show them that, honey?
There we go.
So it's a DVD and MP3. And I always say this is like the foundational teaching that really helped me to really just kind of go to that next level in my life. I had to kind of get over myself, is what I talked about in this teaching. And last week we had the Leadership Mastery book, and we want to congratulate Alex, who won that book, and we are going to be mailing that out to you. And again, to become eligible for the weekly giveaway, you can subscribe at wealthbuilders.org, or if you're already subscribed, you're already in the drawing. And also, one of the special things about this live stream is we want to hear from you. We want to interact with you. You have the opportunity to ask questions, and we answer as many questions as possible during the live stream. So here's how you post your questions. You can post them in chat if you're watching us on Zoom, or if you're watching us by Facebook today, go ahead and type that question in the comment section, and we've got a wonderful team standing by that is pushing those questions forward, and we'll answer as many of those as possible. Also, this is a viewer-supported live stream, and so if you would like to sew into Wealth Builders, we're partners with Wealth Builders, and it's been an amazing blessing. You can give at wealthbuilders.org at the donate button. And you can become a legacy partner and just commit to giving to Wealth Builders on a monthly basis. Or you can text to give, and you can do that by typing the word give to 855-444-8056. And it's really easy to get set up for that. And so, Dave, you are going to start our live stream in prayer today.
All right. I'm happy to do so. And one of the things that we like to do is include the Word of God in our prayers. That Billy and Becky make an emphasis on, and the whole team, that the Word of God is central to our belief standards and an integral part of how we operate. So in keeping with our thoughts about the scriptures, I'd like to share with you today 2 Corinthians 9:8. And this is out of the Passion Version. This is one that we've recently prayed. Love the Passion Version. It says, yes, God is more than ready to overwhelm you with every form of grace, so that you will have more than enough of everything, every moment, and in every way. He will make you overflow with abundance in every good thing that you do. And then it goes on to say in verse 10 that the generous God who supplies abundant seed is even more extravagant towards you. Isn't that wonderful?
That's awesome.
So Jesus, today we just thank you that you are more than enough. You're extravagant. You provide in everything and in every way. We thank you that you give us the ability, the grace, the strength, the power to really live our lives to be who we are, to do and to be who we really are in Jesus. And we just thank you for that. And I just thank you for each person listening today, that they would experience you in a personal, intimate way as all the provision, the peace, the stability, and the strength that they need in this moment now and throughout this week. Thank you for that. Thank you for our guests that are speaking today. Your blessings upon them. In Jesus' name, amen.
Amen. Thank you.
You're welcome.
All right. Well, it is my privilege to introduce to you Bill Bronchick, and I want to give you a little background here of Bill. Bill is the host of LegalWiz.com. He's been practicing law and investing in real estate since the early 90s, having been involved in thousands of real estate transactions. He's trained countless people all over the country to become financially successful, speaking to audiences as many as 16,000 in mega events. Listen to this. He shared the stage with people like Rudy Giuliani, Steve Forbes, and Colin Powell. And so we're so excited to hear from you today, Bill Bronchick, as you teach on the Silver Linings Playbook, where the opportunities will be for real estate in the coming months. So welcome, Bill.
Thank you, Karen. It's my pleasure to be here and share information and ideas with you and your wonderful crew of people who put this together. I want to thank them as well as the people who join us. I came up with this idea called the Silver Linings Playbook for Real Estate Investing, where the opportunities will be for real estate in the coming months, because I think there's going to be some tremendous opportunities for some people who invest in real estate and who are thinking of investing in real estate. It's really a good time. I think that the harsh reality, let's look at it. People are sick and dying, unfortunately. Businesses are shut down. Unemployment, they say, could reach as high as 30%, very scary. Tenants cannot pay rent, cannot afford to pay rent. Many of them are not paying rent. Houses aren't being shown by realtors, or very minimally in some states now, and buyers are skittish and will lack credit to be able to buy houses, and lending has ground to a halt, all but a halt in most states, just because there's no people to work full time, and they're very much behind on their lending process. So will the market crash? Yes, no, maybe. Well, I'll give you the lawyer answer, as they say. It depends. So let's look at what's going on in the market. Real estate is all local. Understand that when people talk about the real estate market on shows like CNBC, they're talking about the general numbers nationwide. But real estate really is local. It's local to your city. It's local to your neighborhoods. And let's look at the supply, which is really the key factor in determining housing markets, the amount of houses available for sale nationwide. And looking at this map, you could see all over the places where you have red is a high housing shortage, lighter red is some housing shortage, the pink is need for more permits, blue is sufficient supply, and black is job loss. So let's look at where there's job loss and there's very little. It looks like southern Connecticut and in between West Virginia and Kentucky. Black spot there, looks like a little bit there in southern Illinois and a couple of spots in Louisiana and Arkansas, but not too many spots around the country where there's significant problems with housing. Alaska, unfortunately, is going to be one of them. But looking on the other side of the spectrum, the dark red, just look at the coast of California, where prices are already ridiculously high, particularly upwards towards San Francisco, the San Francisco Bay Area. That continues to be a shortage of housing. And if you've ever been to San Francisco or ever lived there, you know you have to drive east of the Bay Bridge about an hour and a half before you can afford anything as far as housing. And I think that'll continue to be the case on the West Coast. You see it in the Northeast, in New York City area, New Jersey, and then of course in Southeast Florida, you could see there all the way from Boca Raton down to, or Jupiter down to Miami Beach, there is a high housing shortage. What does that mean, a high housing shortage? Well, a shortage in housing means that there are more buyers than there are sellers. So the building hasn't caught up. There's only a certain number of housing, certain number of houses available for sale, condos available for sale, and either there has to be a slough off of demand, which there will be temporarily, or there has to be a significant increase in the amount of homes available for purchase that would change the balance of the values of homes. So when demand exceeds supply, as it is in most markets, as you can see from the map, prices go upwards. When demand drops off or supply has increased relative to demand, prices will drop. So looking at that, you can see in a lot of the major markets in the country, there is still a pretty high housing shortage. And I could see on the map there, looks like Denver, Colorado metro area has a need for permits, and there's a little spot in red, and I'm going to assume that that's Fort Collins, Colorado. Can't really see exactly on the map, but that's about smack where it is. There's a housing shortage or need for more permits to build houses to overcome the lack of supply. So this is good news, and this is very different from the housing crash of 2008, where there was excess housing supply. I'll give you an example. In my market in Colorado, Denver metro area normally had 25,000 houses for sale on the multiple listing. During the 2008 period, it was as high as 32,000 right before the crash, and took a while for that inventory to be sucked up. But now we're down around 6,000 to 7,000 homes, which is way below normal. And it's like that in most major cities, where the number of homes for sale is way below what it normally is, which means you have still have a good demand for housing and a low supply, which is going to force prices upwards. Now, temporarily, as I mentioned a little while ago, there's going to be a slough off of demand because, buyers are unable to get credit, houses aren't being shown. So what we're going to see is the number of houses for sale and have sold, in particularly over the last 2 months, and then probably the next few months, is going to slough off, and prices might squeak a little bit, but it's going to come back fairly quickly. Let's look at the next slide. So this is from Realtor.com. Pueblo, Colorado, about 45 minutes south of Colorado Springs, where our good friend Mike is, was the only market to see more views per property and post an improving number of days on market over the last few months. Home buying demand has pushed out of the bigger cities into smaller cities that are lower priced. So we see Colorado Springs, Colorado. That's just a neighborhood city near where I am. Fort Wayne, Indiana. Topeka, Kansas. Pueblo, Colorado. Columbus, Ohio, doing very well. Modesto, California. Manchester, New Hampshire, a nice little town. Lafayette, Indiana, been there. Sacramento, which is near San Francisco. It's the capital of California, doing very well. And Fresno, California, markets that are predicted to do very well, and they're more like satellite cities of the bigger cities that are around them, or just smaller cities. Let's look at the next slide. According to CNBC, coronavirus will shrink U.S. home prices 2 to 3% nationally. But a deeper dive could be in store. So home prices, they're expecting to fall 2 to 3% this year. Now, keep in mind that before the coronavirus, the first 2 to 3 months of the year, housing prices went up 3 to 4% nationwide. So the drop is actually closer to 6 to 7% in overall. As a comparison, home prices dropped 27% during the Great Recession from 2006 to 2012. And Zillow predicts a very fast decline in home sales, which would bottom out by the spring and recover about 10% each month through 2021. So we're looking at a short window here of opportunity to buy houses at bargain prices, and I think those who step up and get in the game are going to do very well. Let's look at the next slide. Housing fundamentals are strong, much more than they were leading into the Great Recession. That bodes well for housing in general, says Svena Gudel, if I pronounce that right, Zillow's chief economist. Despite the difficulties, we're seeing several signs there's a good amount of demand for housing, and buyers and sellers and agents are growing more comfortable moving transactions forward where possible. So again, we're going to have this, slough off of sale of homes, which is going to affect prices, and people are sitting a little longer on houses right now just because there's fewer showings, fewer open houses, but things will move along towards the end of the year and into 2021. As a comparison, home prices fell over 27% in the Great Recession. In some of the nation's largest cities, they fell even harder. Those of you who were in Vegas or in the panhandle of Florida or Phoenix or LA, you saw prices drop quite a bit. So by February of this year, prices were 15.5% higher than the 2006 peak and 59% over 2012. Next slide. Nonetheless, there will be individual people with severe economic issues that will result in a wave of potential foreclosures or potential deals, depending on how you look at the situation. So there's going to be people whose businesses went under, people who lost their job, or people who were just fundamentally had a change in their industry, that they're just not working the same job or making the same money. So they're going to have individual people who are going to have individual issues that need help, and buying their home might be some of that kind of help and an opportunity for you to make money. Sun Tzu said in The Art of War, there is in the midst of chaos, there is also opportunity. So in this chaos, there is opportunity to make money and make a profit. And by the way, there's nothing wrong with that, by the way. I don't see anything wrong with the idea of, well, certain sectors of the economy are having trouble and we're going to look for opportunities to buy. There's nothing inherently or ethically wrong with that, because we're not taking advantage of people. We're just looking for opportunities in the economy that we could buy in and profit. Now, we're not congressmen and we don't trade insider information. That's unethical, but there's nothing wrong with looking at the situation and saying, how can I make a profit from this opportunity? And also at the same time, help other people. So again, don't feel guilty about going and looking for real estate bargains. There's nothing wrong with looking for investment opportunities when things are bad. You are helping people out of bad situations who are facing possible foreclosure and maybe even homelessness. If someone's in foreclosure and they have no way out. Most people are going to put their head in the sand and do nothing, get foreclosed, and end up getting evicted from their home. So you're helping these people by avoiding a foreclosure, which could ruin their credit. And you were also preventing neighborhoods from becoming blighted. When 2008 crash came along, there were a lot of properties that were vacant for years that were foreclosed and boarded up, and it blights neighborhoods. So we're preventing that, and people in the neighborhoods are thankful for that. So real estate is about solving people's problems. You find people with a problem, you help solve that problem, you make money. That's perfectly okay. And that's the two really cornerstones of every deal that I do. I have to, one, make a profit, and two, help someone out. I don't want to put someone in a worse scenario than they started. And of course, I want to do it to make money. Now, you can help people out for charity. That's fine if that's your business model. But if your business model is a profit in real estate, you can make money in real estate and then do charitable things with that money in another way. But if your business model in real estate is profit, you have to make a profit on a deal and make sure that you're helping out the person you're dealing with, the customer, so to speak, that you're dealing with. So where the opportunities, I think, will be in the coming months, a lot of foreclosure opportunities and short sales. For those of you who are not familiar, short sales are when banks have owed on the house more than the house is worth. The property's worth $250. The bank is owed $350. And the bank is willing in a foreclosure scenario to take maybe $200 instead of $350, leaving you some equity in the deal. And a lot of banks are willing to take a short because they don't want the property back. They don't want to deal with rehabbing it and then reselling it with a realtor or renovating it. And they would just cut their losses early to avoid all that. So a lot of banks are willing to do short sales. That was very big 2008 to 2012. And I think that's going to make a big comeback. Rental properties will do very well, despite all of the economic pain in the real estate market that we're going to see temporarily. People need a place to rent. Affordable housing is still very, very lucrative, because as much as they build homes, they're not building affordable homes. They're building expensive homes, medium to expensive priced homes. Builders and developers are not building cheap homes. So if you could buy, basic, what we call starter homes, the 12 to 1,500 square foot little box that they built in 1950 with 3 bedrooms and 1 bath and a 1-car garage, those rent extremely well. And there's just a limited supply of those and plenty of people willing to rent them. So I think those will be very good opportunities. Where else will the opportunities be? I think fix and flips, like you see on the TV shows, that's not reality though. The reality shows, but it's not reality. Just understand that's entertainment. But not until 2021, because if you buy a house now and fix it up, who are you going to sell it to? Because you can't do an open house yet in money markets. And again, demand is going to be temporarily off for those. So I'd probably wait till the earlier part of 2021 before doing fix and flips. And finally, I think there's some opportunities for wholesales, which are buying properties at cheap prices and then selling them to other investors at slightly more prices. And then that investor is going to fix and rent it or fix and sell it. So wholesaling is a whole side of the business that anyone can get started in and make anywhere from $3,000 to $5,000 per deal on a quick flip from a homeowner to an investor without a lot of money invested. And finally, tax liens. And we're going to be talking about wholesales, and Dan will especially be talking about tax liens at the real estate workshop, which is a very, very profitable way to earn a good return on your money, anywhere from 15 to 25%, depending on which state you're doing it in. First liens on properties guaranteed by the local government. Very, very safe investment, which is why when you go to tax lien auctions, I often see hedge funds, banks, insurance companies, and other investors buying these things up because they're kind of a hidden secret. So wholesales, foreclosures, tax liens, rentals, we'll be talking about all that at the real estate workshop coming up next month. And I understand it's already full, but there's only the live stream available. So definitely want to participate in that if you want to learn how to take advantage of some of the opportunities to make money during this pandemic. Next slide, please. So a couple of pointers here about real estate investing. I think this applies in life in general and business in general. Number one, get out of your comfort zone. Be willing to do something different. If what you're doing right now isn't working for you financially, you've got to be willing to do something different. Here's an example of someone who did something different. This is a girl from Port St. Lucie, Florida. I saw this on ABC News' website. This was in 2010 during the last crash. And this young girl was 14 years old, had made about $6,000 from selling things on Craigslist. And her mom had a listing on a short sale, foreclosure short sale property in Port St. Lucie, just a little home worth about $12,000. Actually worth a little more, but for sale for $12,000. And she says, Mom, can I buy this as a rental property? And her mom says, well, where are you going to get the money? She says, well, I have 6. And where are you going to get the other 6? Well, Mom, you're going to lend it to me. She says, oh, really? And how are you going to pay me back? He goes, well, I'll pay you half the rent every month until it's paid. And who's going to fix up this property and get it ready for rent? She says, my friends and I will. So, she's a minor. You can't sign a legal contract. Mommy signed the contract for her. Mommy went to closing. They closed on the house. The young girl and her friends had a pizza party and painted the place and cleaned it up and got it ready for a tenant, rented it out. The tenant didn't pay rent, and then she evicted them and put another tenant in there. And then after she was done paying off her mom, she went and bought another property. So you got 2 properties. Boy, it's tough, when you're our age, look in the mirror and say, what's my excuse? A 14-year-old could do it. Gosh. So, be willing to get out of your comfort zone. Next slide. Number 2, be decisive when you see opportunity. This is going to be a short window of opportunity, I think, to pick up good real estate bargains over the next 6 months to a year. And if you don't take advantage of them, you're going to have to wait till the next time around, which could be another, who knows, 6, 7, 10 years away before the bargains come back again, because real estate values will almost go up without exception. So if there's a temporary trough, now's a good time. About making decisions, in the book Think and Grow Rich, Napoleon Hill writes, analysis of several hundred people who had accumulated fortunes well beyond the $1 million mark disclosed the fact that everyone had a habit of reaching decisions promptly. People who fail to accumulate money without exception have a habit of reaching decisions, if at all, very slowly. So be a decision maker when you see opportunity in the real estate market. Next slide, please. Number 3, most importantly, invest in yourself. Not just in real estate, but invest in your skills, in your knowledge, in the necessary education that you need to go prepare yourself for a market like this in real estate. Because as simple as it seems, there's a lot of do-it-yourselfers out there who figure, I can just look on the internet or watch a TV show and I got it. And, that could be a recipe for disaster. I always tell people you can't get rich in real estate quickly, but you can get broke quickly if you don't know what you're doing. So good opportunity to learn at the upcoming workshop. Dan, you're going to be talking about tax liens at the workshop. Why don't you tell them a little bit about your expertise at that?
Yes, sir. Tax liens, years ago, our market dried up as far as good properties that you could find as far as foreclosures. A bunch of investors moved in after 2008 to 2011 and gobbled up all of our properties. And so I was always looking for another niche on how to find good properties. And I heard about tax lien properties. And though the margins are different state to state, county to county, the methods are very much the same across the United States. And so I began to go and bid on properties. Now, in most cases, you do not own the property the day you win the tax sale. Basically, for us, it's a year. But what happens is you go to the tax sale, the people have not paid their taxes for a year to 2 years in most places, and you bid on the right to petition for deed. And the bidding starts at what they owe in taxes, and it goes up from there. And everything over that you bid is surplus. You get interest on that as well in most places in the U.S. And so I was able to gobble up a bunch of great properties for a long time. We still go to tax lien sales. And I bought $40,000, $50,000 houses for $5,000 to $10,000. Now I had to wait a year, but because like Bill said, it is basically county secured or state secured. You are not, the government's going to secure that you either make interest on the money that you bid, or you can petition for deed at the end of the maturity date. and get a piece of property for pennies on the dollar. So it has been so great for us. We bought multiple properties. I can honestly say I've never paid more than $20,000 for any property at a tax lien.
Wow.
And one of them that I purchased, I paid $17,000 for, and I sold it for $72,000 to the next door neighbor.
Wow.
And so it would be good for us to learn some strategies like this. So no, thank you so much. And I look forward to talking more about tax liens. So it's not a one size fits all, like Bill says. There's so many different ways to make money in real estate.
Great. And Mike, you're in Pueblo, Colorado. That's ground zero for great market and great deals, right? Or for rental properties especially.
Yeah, Bill, and it's just like you said, you know, when you hear the news, they talk about the real estate market, so to speak. But, you know, the real estate market is micro markets. And so we are getting a lot of Denver investors and Colorado Springs investors coming down to our home turf down here. But like I tell everybody, you know, my house has come to me, so I'm not worried about investors coming to me. Matter of fact, I've helped out some investor friends of mine find property and get them hooked up with the team. So Pueblo's a great place, but it is escalating. The prices are, and it's kind of like, Bill, I've heard you say this before as well, as people who are selling houses always think that their house is worth a lot more than what it reality is. And so I see a little bit of that tendency. So I think in the next few months, like you said, the prices, when sellers realize that, you know what, I'm not selling this house for the top dollar. So I believe there's going to be a lot of opportunities, not only in Pueblo, but nationwide.
Right. And it's going to be a pretty short window, it looks like, from what all the experts are saying on the estimates of when the market comes back. You know, if it comes back spring of 2021, that only gives us about 6 to 9 months. So get off the sidelines, get in the game.
Yes, pull that trigger.
And I would say this. Yeah, years ago when I met Mike, we would be together and Mike would say Pueblo and people would laugh at Pueblo. It's like all the stoners are moving to Pueblo. What's in Pueblo? Could any good thing come out of Pueblo?
Yeah.
And I'd just like to say for everybody listening, how do you like me now?
Yeah.
Okay.
Thank you, Dad. That's good. That's good.
It's an emerging market.
Yes.
Wayne Gretzky said this. They asked Wayne Gretzky, how have you become such a great hockey player? And he said, everybody is skating towards the puck. And where it is, he said, I skate to where the puck is going. And so one of the things with Bill Bronchick and the rest of our team is, you know, I love with Billy and Bill Bronchick because they're looking at the trends where it's actually going, not just where it's at. And so I think that is a huge thing. And I like what Bill said, and I echo what Mike referred to, is that all real estate is local for the most part.
Absolutely.
It's so good. Do you know, Bill, Dan, and Mike, it's such good information. Something that you said, Bill, really caught my attention, and it's about being a decision maker. I mean, I actually do this myself, but so many people love looking at real estate and then they're disappointed when a property that they liked goes. And my question is, well, did you have a pre-approval letter? Do you have your financing in place? No. So can you just tell us a little bit about what's available out there for financing right now and how important that is to go in and grab these deals?
Absolutely. If you have good qualifications, you have a steady job, you've got good credit, the interest rates are lower than they've ever been for investors. As owner-occupied loans are a little lower. I just had a client get a VA loan, 2.87% on a 30-year fixed. You can expect to pay somewhere around high 3s to low 4s as an investor. That's still historically extremely low. I mean, I remember when the house we lived in when I grew up, that my mom bought it as a bargain from a developer at 14% interest. And that was a bargain back then, 14% interest. I don't think we're going to go anywhere near that in the short or even intermediate term. I think the government's going to suppress the interest rates and try to keep the things where mortgage interest rates are very low for a while to stimulate things. So there's a great window. When you buy a property on a 30-year mortgage at 4% interest, When interest rates go up to 7 in the future, what's going to happen is rents are going to go up with inflation, but your payment remains the same on your mortgage. So that mortgage is no longer a liability, it's an asset.
I think that's a really good point, Bill, because part of the decision on when to buy is based on the financing that's available. So the longer we go, there could be the ability of the rates to inch up. And so locking in now, even if people have to purchase maybe not at the complete bottom, taking advantage of the financing right now could more than make up any drop in pricing in the near future.
I agree with that. I think that you could buy a property for X and finance it at 4%, or you can buy for 10% less in the future, but your interest rate might be 5.5, 6. If you're looking over the long term as a rental property, you will make far more money from the lower interest rate payment than you will from the lower price.
Awesome. Also, with fix and flips, we've got a lot of people in our real estate coaching program, which you're part of, Bill, and so is Dan and Mike, that are doing flips. And I talked to a gentleman that does a lot of flips in the Colorado Springs area. And of course, that was one of the markets you said is really hot. And he mentioned that he hasn't even lost anything during this pandemic. Everything has stayed on course. So I know that you recommended waiting for fix and flips until 2021, but is there still opportunities for people during 2020 that live in those hot markets?
Mm-hmm. Yes, I think there is. It's just you have to expect to maybe hold the property a little longer between, not just between listing and sale, but between sale and closing, just because it's taking a little longer to process. You know, appraisers, inspectors, you've got engineers who all have to do their job on the house, loan underwriting, and everything is slowed down just because what's going on, you know, in the economy and what's going on in the job market. There's just fewer people employed, fewer people working full-time in a full schedule, so you can expect things to take a little longer.
That's awesome. Well, we've got a lot of great questions coming in, and so I'm going to go ahead and get started with that. The first one is from Alicia, and she says, we are planning to buy in North Carolina, and I want to make sure we're buying right. Is the criteria for buying a personal home different than buying a rental?
Yes and no. You want to get a deal, but you also, it's the place you live, so emotion takes over a little bit because remember, you're going to live there. You're not just thinking numbers, you're thinking is, do I want to live here and make this my home? If you think of it as an investment, which a personal home is not always an investment. Sometimes it is, sometimes it's not. You have to look at mostly, you know, location. Can I sell this property for top dollar, or at least what I paid for it when I go to resell it, depending on how long you plan to live there, of course. And can I get good, affordable financing at the lowest interest rate? And now I think that, again, we're looking at interest rate versus price. Interest rates are bottoming out at the super new lows. I think that if you lock in something around 3.25, you can't go wrong. You can't go wrong.
Awesome. Thank you. This is from John Blogget, and I'm going to start with Bill on this question, and then Dan, I'm going to have you contribute as well. And the question is, do you predict a surge of people moving into rural America? We've heard some people say due to the pandemic and issues with close proximity of the city suburbs that people will want to go out away from those cities.
I think for sure. Florida is expecting a huge surge from New Yorkers. New Yorkers really got hit badly, and their real estate market is going to suffer accordingly because of the entire breadth of how bad the coronavirus hit New York City. So we're going to see is a lot of people just fleeing New York and the big cities that got hit hard for places like South Florida, nice and warm, little more spread out than a place like New York City. So yeah, I think certain cities are going to see people fleeing that got hit hard. Now, San Francisco's different. San Francisco didn't get hit so hard with the coronavirus, so we may not see people fleeing out of that city into the Midwest or to Texas or whatever. But I think, all roads point towards Texas. Everybody in the expensive city says, when I don't want to live here anymore, they think, I can live in Texas. It's nice and warm down there and it's cheap.
It is. I love living in Texas.
And there's no state income tax. So,
That's exactly right. That's awesome. And Dan, that's where you have built your real estate empire, if I can say that. To me, it's an empire. Can you just share a little bit on that as far as what you see happening in the rural areas?
Yeah, I think the flyover areas, I call it the flatline communities. Flatline not meaning that it's a dead community. Flatline meaning that it's not as volatile as a lot of your really concentrated populations. And so I've encouraged people to go 50 miles, 30 to 50 miles outside of the major metropolitan areas and purchase. And I have one friend that's just rolling it. He's like, Dan, how do you find $40,000, $50,000 houses? That house would cost $400,000 in Venice Beach. And we talked him into going to a rural outside of the Twin Cities in Minnesota, and he's buying $40,000 houses that are renting for $900 a month, because what you buy it for and what it rents for are two different things. So I would encourage people to go to what I would call those flyover areas, because there is so much money. And usually it's a generational community. It's not like you've got one business and it's all GE, and if that shuts down, everybody's bankrupt. A lot of times it's farming communities. It's got just a multiplicity of different economies that are happening all in one community. Many times people don't move away from these communities except to go to college, and then they move back. And so even though you might only be getting 2-3% appreciation a year on the home, you're going to see that it is a really stable growth over time. And you can find those good deals in those areas. So I would encourage people to begin to look at some of these rural communities outside of the metropolitan areas. And I think that is where America is going to migrate in the future. I feel that in my heart. I know people, they don't have a problem driving 40 minutes or 50 minutes to work if they live in a great place that is economically affordable. And as well as we're moving into a different generation where people can work from home. And so if I'm going to work from home, sometimes, you can find a great home, half price or a third the price that you would in a metropolitan area, and not have to deal with the commute, even though you're living far outside of maybe where your workplace is.
That's awesome, Dan. And kind of a fun fact is the town that you were talking about is like right where I grew up. It's just a few miles away from Wells, Minnesota, where I grew up. So that was just really awesome to hear that your friend was able to prosper in that community. I agree. I don't know if you guys have experienced this, but as I talk to people that I work with, most organizations have found that the productivity level of their employees has gone up during this pandemic from having a work at home program. And so I think that is going to really contribute to what you are talking about, and people will be able to live anywhere and do a really good job with their work, and the workplaces are starting to see that, so they'll be more open to it. So lots of great opportunities. All right, this question is from Laurent Brenez, and she says, hello, Karen and the team, and God bless you. This is from Laurent and Julie. They're in the UK. We followed the online real estate course. She said it was very good. Something that she's not sure she got from tax liens is what happened to your money if the owner decides to pay back their taxes before the end of the first year. Do you lose it? And Dan, I'll send that question your way.
Well, in Indiana, it's different in any state or county, but where I'm at, you're going to get interest regardless. Let's say in Indiana, if I purchase a tax sale property, I've got a year before the maturity date and I can petition for deed. But let's say one day after I purchase the right to petition for deed, or I win the lien on their property, if they go in and they pay their taxes, I get 10% I get all my money back that I invested plus 10%. And let's say it was a $10,000 tax bill that they owed, and I bid up to $30,000 on that note. They got to pay me 10% on the $10,000 that they owed the county. But they also, it's called everything over above what I bid on, or above what they owed, is something called surplus. And so I get 5% on every dollar that I bid up to past what they owed in taxes. And in Indiana, if they pay their property taxes in the last 6 months, I get all of my money back, what they owed in taxes, plus 15%. So the least I'm going to make on what they owed in taxes if I invest is 10%. The most I'm going to make is 15%. And everything I bid above what they owed in taxes, I'm going to get a flat rate of 5% that the county is going to give me. And the highest thing is if they don't pay their taxes, I actually get the property. And so, does that answer your question?
That is awesome. And just a reminder too, because we had a question coming in asking if we're going to cover this in the real estate workshop. And Dan has a whole session on this, and that was a lot of information just in a couple minutes, and imagine a whole session on it. But it is an area that we have to really understand and know what our risks are and the rewards. So that was great. All right, Butch Hartman's got a question. Hey, shout out to you, Butch and Julianne. And the question is, I heard that we can now take money out of our 401k without being penalized. Is that true? What do you think about that? And I'll have that question go to Bill.
Yes, for the short term, you're able to take a distribution out of an IRA or 401k of up to $100,000. If you pay it back within 3 years, then there's no taxes due on it. There's no early withdrawal penalty either way, the 10% early withdrawal penalty, but you could take it out and you even have 3 years to either pay the taxes on it or pay it back, which is not a bad deal. So if you take the money out, let's say $50,000 out of your IRA and buy some tax liens and do all these other things and earn a substantial rate of return and then pay the principal back of the original amount, there's no tax at all.
Great. Thank you so much. All right. So Mike, this one is coming your way to begin with. This is from Nader Shayeb. I hope I pronounced your name correctly. I apologize if I didn't. He says, my name is Nader and he's from Knoxville, Tennessee. And he doesn't know if he should sell a rental house and hope for the opportunity in the coming months to buy a couple of houses with that money. Houses still seem to be selling high right now in his area. Any thoughts or tips on selling high in the hopes of purchasing low?
Well, first of all, I think no matter what, I think I don't want to try to over spiritualize things, but being a believer, I think you just need to be led, first of all, because Billy even teaches about some deals that he's had an opportunity for, but he just felt kind of funny on the inside. And he passed on it, and lo and behold, later he found out that something was majorly wrong with that house. So having said that, I'm not for sure about the market, the micro market in Knoxville. But I know that if you can, like Bill teaches this as well, there's always going to be great opportunities. If you think you can sell something to get multiple houses, then yeah, I would say that could be good for you. But I think the biggest thing is just to censor in your heart what you feel and go with that. But don't let fear. I know this pandemic, it causes fear, and everybody says, man, I better sell, or I'm forced to sell, or I should sell. I don't make decisions based on fear. I mean, if you think there's opportunity, like Bill said, that within the next 6 months, it's going to be a short window. So don't be afraid to pull the trigger.
Awesome. Thank you, Mike. And Bill is nodding his head in agreement. Bill, this is coming your way. I've got the same question from two people, from Robert Chambers and Julius Green. And they say, what are the key factors in determining if a market is an emerging market?
Great question. An emerging market, you could tell by a number of things. Employment opportunities, the local economic lay of the land, and also, find out who else is coming in. When you see Walmart building a super center in a place that you think there's not enough people here to support that, well, Walmart's thinking 5 years down the road. They can lose money for 5 years because they expect the population to explode over the next 10. Or Starbucks. I always follow Starbucks. If Starbucks comes into a neighborhood, that's an up-and-coming neighborhood.
Yes, I agree.
Without a doubt. Starbucks never goes in loser neighborhoods.
That's really good because it's leveraging. I've experienced that in Colorado Springs in a neighborhood, and we've talked about this at the real estate workshop, where one of the guys that I work with that does a lot of flips, he started going in there, and that's what he was looking for. Is there was Starbucks was popping up, Tokyo Joe's, and other things. So they're going in, they've already done their research, and we can just leverage that, I'm sure, millions of dollars in research to find those areas. That's great advice, Bill. Thank you so much. All right, this question is from Sarita Jackson, and Bill, I'm going to send this your way as well. She says, I live in Florida in the Orlando area, and I've experienced an increase of people moving here, which caused rent and home prices to increase. We are in the market to buy and need a large home and a good deal for our family. What advice can you give us?
That's great. Orlando is definitely a booming market internationally, as well as locally. People are buying in that market, and things are very stable, and prices and rents, as you mentioned, are going up. So what I would do is look for the opportunities twofold. Number one, can you get an opportunity to buy it below market, such as a foreclosure or a short sale, where you can make a profit going in by buying it under market? Also, what can you finance it at? Again, financing is key, because if you plan to live there long term, the interest rate that you pay and the interest you pay on money is going to save you more in many cases than getting a little bit of a cheaper price. And third, look in the future. If you're looking to live in this home for 5 years, where do you think prices will be in 5 years? Is it the right school district? Is it in the path of development? Are new shops and shopping centers and restaurants going up? Is it an up-and-coming area? So look at that potential appreciation over the next 5 years. If you plan on living there forever, then you buy a house that you like. I mean, it's as simple as that, and get the best interest rate and the best deal you can on the price that you can. And it's not always an investment when you're buying a house.
Awesome. Thank you, Bill. This is from Ariel Sizemore, and Ariel says, thanks for the great info. And she's wondering how you feel about owning mobile home parks.
I love mobile home parks. That's the cheapest thing that someone can get into as a rental or ownership, other than sleeping in their car. So they tend to be very, very good cash cows. They are management intensive because there's a lot of turnover in parks. And unfortunately, if you live in the tornado or the hurricane zone, they tend to not fare very well. You always see on the news, a turned over, destroyed mobile home in those places. But if you're the park owner, very, very profitable business, because not only are you going to get ground rent from everybody because you own the land, but you can also own some houses in the parks. And, unfortunately, when people need to leave in a hurry, whether it's a divorce or something that forces a quick sale, a lot of mobile homes aren't worth moving. If it's only worth $5,000 or $10,000, it might cost you $5,000 or more to move it. So these people have a situation where they got to sell quickly, and if you're the park owner, you get first dibs.
That's awesome. Thank you. This is a question from chat, and it really builds on something that Dan was saying about looking ahead, the example with Wayne Gretzky. And the question is, are there certain industries that we should look for in communities to purchase investment properties that may actually thrive during this time? And Dan, I'm going to start with you, and then if the other panelists want to comment on it, that'd be great.
I really believe, this is my opinion, I believe with everything that's happened in China, I believe that manufacturing is going to come back to the United States. And in our area, we have a lot of first responders. We have a lot of prisons, or a lot of people that cannot be unemployed because of the pandemic. We have a lot of hospitals, nursing homes, prisons, and a lot of people that are essential workers in our area. So we're real stable. But I really believe that this with what's happened in China, there's going to be a reboot to manufacturing in the United States. And I really believe that it's going to be moving into small town America. And so, you know, with the trend, I really believe that there is going to be a boom in manufacturing, and to begin to look where maybe some of these manufacturing companies are looking to open up within communities in your state. Bill, do you have anything on that?
I do. You know, it was only recently that I thought to myself, well, who do I want as a tenant? I want an essential worker as a tenant, so they don't lose their job and not be able to pay rent. So I'm rethinking, you know, who's my ideal tenant? My ideal tenant is going to be either someone who's a first responder, a nurse, someone who owns a liquor store, because those stay open apparently, or works at one, and stay away from people who own restaurants and retail shops.
That's great. Okay, Matthew Lafferty has this question. If we buy a rental property that already had a tenant, do we have to honor the previous owner's contract? Bill, let's start with you on that.
If there's a written lease, yes, you do, because the lease is basically a conveyance of an ownership interest in the real estate that goes with the real estate. So if there's a written lease and it hasn't expired yet, the new owner has to honor it. If it's a month to month, just an oral agreement, in most states you just give 30 days notice and you can renegotiate it or tell them to leave.
Okay, great. Thank you. Mike, I'm going to start with you on this, and then Bill, if you could chime in too from a legal perspective. A question from chat is any specific advice on where to get the financing when you buy with an LLC, a limited liability company?
Well, we teach this as well, and Bill teaches a great session on LLC, but I think you have to know, and I've experienced this in Pueblo, all banks are not created equal. So you need to go. People have told me I went to certain big box banks, you know, and they said, no, you can't do this. I've even had a loan officer laugh at me. And so you just keep going to a mom and pop bank, especially, and you can keep going. Don't be afraid to hear the word no. And but Bill can chime in on getting your real investment property in an LLC. That's the safest place for you to be.
That's great. And Bill, yeah, if you could comment on that, because this is a big part of what you teach at the real estate workshop.
Right. I agree with Mike. Go to your community banks. They're going to be a lot more flexible. If you finance through a mortgage broker that gets you a Fannie Mae or Freddie Mac loan, they are not going to allow you to finance a house directly in an LLC. You'd have to finance it in your own name, buy it in your own name, finance it in your own name, and then deed it over to the LLC afterwards, which is not an ideal way to do business. If you go to your community banks, they'll usually allow you to buy directly in an LLC, finance directly in an LLC, with a personal guarantee, of course, they're going to want, but they won't make you take title in your own name and then have to transfer it to an LLC later. Great,
thank you. Again, the information that these guys share at the real estate workshop is so good. And if you want to join us, we've got it available by live stream, and you can register. Go to wealthbuilders.org. Use the code RE100. This is the last week that you'll be able to take advantage of that code and register, and you'll be able to attend this workshop. It's 3 days. We start Friday night. We end Sunday afternoon for just $299. You'll have access to the video, the audio, and the materials as well. So we really hope you take advantage of that. It's really awesome. I've learned so much from these guys personally. Do you know, we are like out of time, but I'm going to just squeeze in one more question, and this could be just a yes and no from each of the panelists. So here's the question. Should we look in states that are open or states that are not open? Is there a benefit to one or the other? Bill?
Open.
Dan?
Open. Indiana, Georgia, Florida, Texas.
Great. Mike?
I agree, but eventually we're all going to be open, so it's just a matter of time.
Awesome. Thank you. I want to thank our team that is behind the scenes. We've got such a great Wealth Builders team, and while you don't see their faces, we couldn't do this without them. So thank you so much, girls, and to Derek for getting this all organized. I want to do a special thank you also to Bill, Dan, and Mike for being part of this. This has been so helpful. You see a poll in front of you right now. The reason we focus on real estate is because that was our number one from last week when we did the poll. So we are listening to you as far as topics and guests as well. Billy and Becky will be back next week. And we just want to thank you so much for being part of navigating the new normal. God bless you and have a wonderful rest of the weekend.